Good day everyone, we are from Group 4 and are going to present all the findings in this video.
Hello everyone, my name is Chee Wei and my matrix number is 27812. I would like to discuss the MRF 108 changes in accounting policy, estimate and error were adopted by these 5 companies. In this 3 years, every company has adopted at least 2 new policies, and Masterpack Group Berhad had the most policy changes in 2018. In that year, the new policy MRF 9 and MRF 15 started effectively. For those who had material impact, they retrospectively applied the changes. Actually, the Bina also adopted in that year, but this policy didn't have any significant effect on its financial statement. In the fiscal year 2019, all the companies except Kwang Yong Resources Berhad have adopted MRF 16 leases as it will apply the policy in the next fiscal year 2020. Since MRF 16 eliminates the distinctions between finance and operating leases for lessee, this induced material impact on the financial statement. Meanwhile, there are also 4 new policies applied by Kwang Yong Resources. All companies retrospectively apply these changes by adjusting the beginning balance of the retained earnings and other comparative amount disclosed for each prior period presented. Furthermore, in 2020, 3 of 5 companies did not have a significant effect on the accounting policy changes. The only company that has material impact due to changes in policy is Kim Hin. During this 3 years, if the policy is transitional, the company will disclose it at the notes to the financial statement. In short, we studied that all the companies have followed the accounting treatment required by the policy, which is retrospective.
Now, I would like to continue the presentation about MFRS 110. It will focus on non-existing events which occur after the reporting date but before the authorized date. All the company has disclosed the event in the notes of financial statement. The event occurred between Kwang Yong Resources Berhad and NGB Berhad are almost similar. Both of the company classified the COVID-19 outbreak as non-existing event. The subsidiary of Kwang Yong Resources Berhad announced the acquisition of oil palm plantation land in Sabah. For NGB Berhad, its subsidiary entered sales and purchase agreement for sales of asset and acquisition of shop office. Its subsidiary also entered some agreement for development leasehold land in 2019. The subsequent event for Intabina Group Berhad is similar from 2019 to 2020. The disclosure is about COVID-19 outbreak and declaration of interim single-tier dividend. The disclosure for Kim Hin Industry Berhad in 2019 is changing its input into expected credit loss model and revising the assumption in value in use. Masterpack Group Berhad is the only company that did not classify COVID-19 pandemic as non-existing event. It only disclosed the declaration of higher dividend and additional special dividend in 2019. In short, most of the events are common under MFRS 110, except for the COVID-19 outbreak. Due to the limitation understanding about this virus, it only can define as a new virus and the nature of an event under MFRS 110.
A very good day to Professor Madya. So now I will be presenting the MFRS 116 PPE in our findings. Before the pandemic of COVID-19, KLRB and Masterpack Group Berhad's PPE categories measurement model on PPE and depreciation rate of PPE were maintained from 2018 to 2019 as shown in the slides. After the MFRS 16 leases was effective on the beginning of 2019, NGB Berhad and Kim Hin Industry Berhad's PPE categories were declined, while Intabina Group Berhad's PPE categories were increased as it recognized the right of use assets under the notes of PPE. All the company's depreciation rates were remaining the same in 2018 and 2019. Every companies applied the cost model to their PPE except for Masterpack, NGB Berhad and Kim Hin Industry Berhad, which used the revaluation model for some PPE. In 2020, Masterpack and NGB Berhad's PPE categories declined, while others remained the same as 2019. On the other hand, KLRB and NGB Berhad depreciation rate also have some changes in 2020. All the company's measurement model is still the same as usual. Next, the findings on MFRS 136 impairment of assets on PPE. Firstly, KRB has the same amount of accumulated and reversal of impairment losses in 2018 and 2019. Then its accumulated impairment losses declined to 7.124 million ringgit Malaysia in 2020. Only Intabina Group Berhad does not have any impairment losses in the 3 consecutive years, while Masterpack Group Berhad had the same amount of 26,000 ringgit Malaysia in the 3 consecutive years. Besides that, only MGB Berhad has incurred an accumulated impairment loss on PPE in 2018 with an amount of 1.389 million ringgit Malaysia. Lastly, Kimi Industry Berhad's accumulated impairment losses on PPE also dropped from 2018 to 2019, then increased back to 2020. In short, based on our findings, most companies impaired PPEs due to their subsidiaries incurred loss on that years. Moreover, there is no reversal of impairment losses on PPE incurred during the outbreak of COVID-19.
I'm Sze Jia and I'm going to present about the key audit methods. Key audit methods were the most important in the audit of the financial statements for the current year. The minimum key audit methods for the company in our project is 2, which was disclosed by Kim Long Resource Berhad KRB and Masterpack Group Berhad. KRB disclosed common key audit methods regarding the revenue recognition from the sale of palm oil milling products and biological assets or barrier plants from 2018 to 2020. The area examined by the audit was the same in 3 years as KRB recognized barrier plants as biological assets under FRS in 2018. Besides, Masterpack Group Berhad disclosed the common key audit methods of the valuation of inventories and impairment of receivables. Next, Intabina Group Berhad's common key audit methods are revenue recognition from construction contracts, impairment of trade receivables, and cost of sales. At the same time, NGB Berhad is mainly focused on revenue and cost recognition for construction and property development activities and goodwill impairment from 2018 to 2020. Lastly, Kim Hin Industry Berhad disclosed the most among our companies with 4 key audit methods in 2020. It disclosed the impairment of PPE and net write-down of slow-moving inventories from 2018 to 2020. An additional key audit method disclosed in 2018 is goodwill impairment, while in 2020 have 2, which is the impairment assessment of investment in subsidiaries and right-of-use assets. In short, most companies recognize a significant amount of revenue and transactions, which the auditor will focus on as the area will be at a higher risk of material misstatement. It is most likely the companies will involve in fraud or overstated their revenues to get higher profit to attract investors. That's all from me. Thank you.
Good day everyone, my name is Teoh Yi Ting and my metric number is 27722. Now I will present about the financial statement analysis. Based on the table, the return on asset and return on equity ratio can conclude that almost all of the company did not have a good performance due to the outbreak of COVID-19, which affect the revenue decline, and some of the company did not manage well their assets in equity in generating income. But for MGB Berhad and Kim Hin Industry Berhad show an increase of ratio in 2020 during COVID-19 because both of the company have increased in other income, equity, and decline of the cost, which increased the net income, although the revenue of the company was declined. For earnings per share, it can conclude that most of the companies show a downward trend due to the pandemic COVID-19, which affected the revenue, but some of the companies still can increase the earnings per share during COVID-19, like MGB Berhad and Kim Hin Industry Berhad. For the current ratio analysis, we can conclude that even there is a significant event happening in the company which affect the current ratio decrease in some company, but Masterpack Group Berhad, Intabina Group Berhad, and MGB Berhad increased the current ratio during COVID-19 because of increasing of current asset and decreasing of current liability in 2020. Overall, the current ratio for all companies is greater than 1, which means the company are able to pay the short-term obligations. For debt ratio, some companies show a downward trend, but Kim Long Resources Berhad and Kim Hin Industry Berhad show an increasing trend due to the increase in total liability. Although some of the company has increased the debt ratio, but all of the company have a good performance on paying debt by using asset because the debt ratio is below 1, which is relatively safe as they have more asset than debt. In conclusion, even we fail to discuss the accounting treatment for accounting estimate error and adjusting event because of this company led such events. Hopefully, we have extra time to conduct the project next time as a time constraint exists here. However, by conducting this project, we are able to better understanding the disclosure of MFRS and key audit matters. We also learn how to discover the significant information and figures in the annual report and interpret them through this project and presentation. That's all for our group. Thanks for your attention.